Jen, let's go through this. What explains the difference between what you see in a Macy's and what you see in, say, Target and elsewhere?
Well, I think what's really interesting is that Target historically has really kept the consumer at the center of everything they do, and Macy's has been trying to execute against its strategy. But if you take just one area as an example of maybe private label, Target does a really good job of turning that over, keeping it fresh, and putting it in front of consumers. And Macy's is still in the earlier stages of really executing on private label. So when it comes to which audience they're targeting, how well they're executing, I think that's what you're seeing playing out in today's results.
Well, let's sit on the execution over at Target. Target has had some difficulties for sure over the last few years. What have they changed, and what tells you that its swing to growth can continue for this company?
Well, they had actually been on quite a tear and then had some missteps last year. Since then, what we've really seen is kind of a refocusing of their efforts. And that's a combination of making sure that they've got the right assortment. It's about lowering prices on essentials, reinforcing that value message with consumers, which is the message that we've been hearing from Walmart, what we're seeing in the results from TJX this morning. Value is king. And so the price investments Target's making, the emphasis on lower price points in discretionary categories, those are the things that are really igniting sales and bringing people back into the stores and shopping online with them.
Jennifer, how do you understand expanding profit margins at a time of lower prices and value?
Well, I think this was touched on just before this segment where you were talking about just increases in productivity. But one of the things to remember is that during the pandemic, almost all retailers introduced a lot of extra cost into their supply chains because they were desperate to make sure that they had items in stock. We're at the process still of where we're unwinding a lot of the redundancies that were introduced and a lot of that extra cost. So this year is especially in particular a bonus year where they can take extra cost out of the supply chain. It's enhanced by lower transportation costs. That is not likely to continue into 2025 because they're sort of reaping the benefits of that low-hanging fruit. But that, along with other productivity initiatives like AI, are all starting to make a difference.